Okay, let's forget about the dusty textbooks and the complicated spreadsheets for a second. Today, we're going to learn a new language, and it's an incredibly powerful one. It's the language that every single business on the planet speaks, accounting. Let's jump in and see why it's way more of a superpower than just a boring school subject.
I mean, think about it. How does a company really know? Beyond just a gut feeling or how busy the store looks. When you look at any business, from a tiny startup to a global giant, how do they cut through all the noise and know for sure if they're actually succeeding or failing? Because every single day, a business is just this whirlwind of activity, right? You've got sales coming in, receipts going out, bills to pay, inventory to track, payroll to run. It's a never-ending chaotic storm of financial information. And without some kind of system, it would be absolutely impossible to make any sense of it.
So, how do you tame that storm? How do you turn all of that chaos into clarity? Well, it turns out the answer is this incredibly elegant system that's been perfected for over 500 years, and it was designed for one single purpose: to turn that jumble of numbers into a clear, understandable story. And you're not going to believe this, but the system we use today was first written down way back in 1494. It was described in a book by an Italian monk and mathematician named Luca Pacioli. And the truly amazing part? The fundamental system he laid out is the very same one we still use today. Talk about an idea with staying power.
All right, so if we're going to learn this language, we have to start with its single most important grammar rule, its golden rule. This one core idea is what holds the entire system together.
It's called the double entry concept, and the idea is actually deceptively simple. It says that for every single financial event that happens in a business, there are two sides to the story. Not one, but two. And these two sides, what accountants call a debit and a credit, have to be perfectly equal. They must always, always be in balance. This obsession with balance is really the secret sauce of accounting. It's all captured in one beautiful, foundational equation. Once you get this, you get the fundamental logic of how all accounting works. And here it is. Assets equals liabilities plus equity. Okay, let's break that down into plain English. Assets are all the stuff the company owns, things like cash, equipment, or buildings. Now, all that stuff had to come from somewhere, right? It was either paid for with money the company owes, that's your liabilities, like a bank loan, or it came from what's left over for the owners, their investment in the business. That's equity. So what you own equals what you owe plus what's left over. The two sides of this equation must always be in balance. Okay, so we've got this golden rule of balance. But so what? What's the point of all this? Well, the point is to use this system to tell the story of the business. You see, all that hard work, meticulously recording every transaction in two places and making sure everything balances, it all leads to one final product, a set of clear, standardized reports that we call financial statements. This is the finished story, all packaged up and ready to be read. Now, we're going to look at the two most important of these reports. First up is the one that always seems to get the headlines, the income statement. The best way to think about the income statement, or the P&L, as you'll hear it called, is like a company's report card. It's not a snapshot, but rather a summary of performance over a specific period of time, like a quarter or a full year. It basically answers the big question, so how did we do? And you can literally see how it tells its story. It starts right at the top with all the money the company brought in from sales. That's revenue. Then it starts subtracting all the costs of doing business, all the expenses, until you work your way all the way down to that final number, the famous bottom line. So when you boil it all down, the story of the income statement is really simple. Did we bring in more money than we spent? If your revenue is bigger than your expenses, you've got a profit. If not, you've got a loss. That's the story it tells, plain and simple. All right, now for the second critical report. It tells a completely different but just as vital story. This is the balance sheet. So, if the income statement is like a movie of the company's performance over time, the balance sheet is like a photograph. It's a snapshot that freezes a single moment in time and shows you the company's exact financial position on one specific day, what it owns, and what it owes. And hey, does this look familiar? It should. The balance sheet is literally our golden rule, the accounting equation, laid out as a report. On one side, you have all the assets. On the other side, you have all the liabilities and equity. And just like the equation, these two sides must balance.
Not just kind of close, they have to balance to the penny, always. So we've got these perfectly balanced, carefully prepared reports. But why does this financial story matter so much? Because this isn't just some academic exercise. Real people are reading this story, and they're making huge decisions based on what it says. Yeah, these reports aren't created in a vacuum just to be filed away. They are essential reading for a whole host of people, both inside and outside the company, who rely on this exact information to make very real, very important choices. So who's reading this stuff? Well, you've got investors trying to decide if it's a good company to put their money into. You've got banks and creditors trying to figure out if the company can pay back a loan. The government is checking in to make sure rules are being followed and taxes are being paid. And of course, inside the company, managers are using these numbers to plan for the future, and even employees might use them to negotiate for better pay. And what's so fascinating is that all of these different groups are reading the exact same story, but they're each looking for a different plot point. An investor wants to see a story about future growth, while a bank wants to see a story about stability. This really brings us right to the heart of it all. Accounting isn't really about the math is just the tool. The real purpose of accounting is communication. It's about telling a story about a business that is clear, reliable, and consistent so that all of those different people can make smart, informed decisions. And that is why learning this language is so powerful. It's not an exaggeration to say it's like gaining a superpower. It gives you the ability to look at any business, from the coffee shop on your corner to a global tech giant, and truly understand its story, where it's been, how it's doing right now, and maybe even where it's headed. So, now that you know the basic grammar of the language of business, what stories are out there waiting for you to discover?